Welcome back to Learn Crypto. We're here with another market update for the second week of November. So let's just get right into it. First of all, we can see clearly Bitcoin has been making new all-time highs. And how did we know this? Well, we've been pushing this RSI theory that as soon as we push out of that 66 RSI resistance, that's when we'll start making an all-time high. And as you guys can see, we've already done that. Now it's hard to predict the top, and that's really not going to be our focus in this video, but our focus will be when we can evaluate a pullback is coming and where the pullback will go to so that we can be ready to take our positions and buy some spot trades if we need to. So firstly, we can see that we've kind of made this head and shoulders pattern the last time we made our all-time high. So this was back in March. So if we go based off that assumption, maybe we can see another head and shoulders pattern occur. So you see RSI bounce down to 66, push back up, make its head, push back down, push another little bit up, and then kind of collapse. So that's definitely a possibility that you want to see play out. But like I said, it's kind of hard to predict something like that because we're also in uncharted territory. I mean, we're literally making new all-time highs every single day since Trump won. Now, something like that that's kind of unprecedented, it's hard to predict, and I'm not going to waste you guys' time giving you arbitrary numbers that may or may not get reached. So let's focus on mainly the analysis and when we know Bitcoin will pull back. Now, looking back at the RSI, we're on the daily time frame here. As you guys can see, we had been playing into this sort of uptrend for a while. So this was from August going all the way September, October, and finally in November we broke out of it. So as you guys can see, if we start breaking back into this trend, you guys can expect that pullback to follow because we'd have broken this uptrend that's kind of going on. You guys can even draw this line over here. It's kind of very steep, so I wouldn't really, but you can look at it from that perspective if you really want to. But however, let's just focus on this trend narrative that we've got going on. And we know that previously 66 RSI seems to be a big point where RSI likes to bounce from or reject from. So under that assumption, maybe we see something like this. We fall back into the trend, bounce off the 66, and either use it as resistance or just push through again. Looking at the stochastics here, we're clearly oversold on the daily. However, if we go on the 3-hour, we also still have more room to go up. So I think the daily will really just get extended a little bit before we see any move in the RSI. And now another thing we can look at is the weekly RSI. So as you guys can see over here, this is the period where we were bullish. So from here, bullish, 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 and then we start to get a little bearish. We had that horrible choppy market happen, and now we're back to being bullish. And you guys can see, again, over here, all this bullishness came over here as long as we were above that 66 RSI, and over here we did a kind of fake out, but we couldn't hold it and went all the way to the bottom. And you can even see back here, this little run up, we were bullish as long as we stayed over, and as soon as we fell off, the market corrected. And even over here in its initial pump in 2017. So using this same theory, we're back above that 66 RSI. Now we're looking at the weekly time frame here, so it's kind of longer term, but we can also assess the same thing. We want to stay above this 66 RSI. We don't want this little peak over here like we did last time. and then we start breaking below 50 RSI, because it seems like that's where the chop happens, in between 50 and 66. As soon as we start pushing above 66, we enter bullishness. Then the chop happens again between 50 and 66, and now that we've pushed up again, we're back to being bullish. So little things like these over the long term will help you understand the bigger picture, right? Like if you see your RSI on the weekly time frame start falling below this level, well, I mean, if you can see historically what that means, especially below 50, well, that's a big indicator of, yeah, the market has reversed. This is how you determine, okay, it's time to pull out. It's maybe time to assess a position, or, stuff like that. That's how you assess these things. So now maybe we are making new all-time highs. Maybe we stay above 66. You know, we see all this green. That's good and great. But what if we don't? What if we just fall back down, bounce up, and then we see a greater bull market? Because remember, with the Trump administration now in power, that's a very pro-crypto administration. We'll have the SEC director Gary Gensler. He'll get fired in January, and that's still a couple months from now. You know, this could just be a preliminary push-up before the real actual bull run. So how can we assess that? Looking at these greater time frames. This is how you make a whole narrative across all time frames. Now finally, let's look at the 3-hour. So the 3-hour will represent your sort of next few days, as it's kind of a lower time frame item. But we can see, again, we've been staying above 66 RSI this entire time. And it seems to me that this is that key level, as far as the RSI goes, to stay above. As long as we can stay above it, looks like we're good. As you can see, we've kind of formed this sort of uptrend from here going this way, and then we can even draw one like this. This is kind of a little bit more steep, but you guys get the idea, right? We are still within this overall uptrend, and as long as we stay within these uptrends, we should be good to go up. And like I said earlier, the stochastic, again, looks good to keep going up. Bitcoin, which is crazy, at 85,000, even though a couple weeks ago we were sitting here. That's wild how much this coin has really gone up. So now let's assess some possible pullback areas. Now we are in all-time high territories, so it's hard to see where we might see a key level form or a point of contention form. But let's just do some estimates. As we can see, it looks like 75.5 seems to be a potential key area. Look at these wicks here for the past few days. Rejection, support, support, support. Like these little wicks here and candles, they kind of show me that maybe this area might end up being a big area in the long term. And it kind of makes sense, right? Like if you think about it psychologically, we like fives and zeros. If we see 100,000, 150,000, or 75,000, it's kind of like a halfway point. And that's called a psychological level, because we as humans anticipate that, okay, like this is getting to a threshold, right? So this kind of aligns up with that, and then we can look at some indicators. So let's look at the Keltner channels, and let's also look at the EMAs. So now just looking at these two, it kind of gets hard. So let's first look at the Ichimoku clouds and Keltners together. So we can see over here, where does the top of the Keltner sit? 76,000 right now, right? 75.9, but 76,000, sure. However, that's not too far off from our potential key area of 75 73.5. It's just about $500. It's really not that much when you compare it to Bitcoin's relative price. And now the middle Keltner, which is marked in this blue line, it kind of aligns with this, or is aligning with this area that I've marked of 73.8. So this area right here, this is our previous all-time high, 73,777, 73.8, same, whatever. But over here, you guys can see we kind of had that similar reaction. Now, this general area, whether it's 73.8 or 73.7 or whichever, but that just general area, again, seems to be a big point. And as you can see, it's also where the middle Keltner is lining up with. And as for the bottom Keltner, well, it aligns with 70,000. And 70,000 we know is a big area for Bitcoin. That's when we push above 70,000, that's when the all-time high hype was getting created. So again, I'm marking that as a potential area, not only because it aligns with this indicator, but because psychologically, that's where we wanted to see Bitcoin at before. And that's where we'll start to get worried if it falls below that 70,000 threshold. Now imagine Bitcoin going from 80,000 to 60,000 again. That's a lot of fear in the market. I just don't think that'll happen. And if it does happen, that's pretty bearish. I can't lie. We just don't want to see Bitcoin push back below 70,000 right now. So now I just want to look at the Keltner channels. And as you guys can see, so far in this bull run, what do we notice? And I mean just this past little bit. So over here, we push out of the Keltner channel, hold the middle, push out, hold the middle, and again, pushed out, and now maybe we go back and hold the middle. So this kind of pattern, this has been going on for how long? We haven't been below the middle Keltner since October 24th. Here, here, and then wherever we pull back from, I think you guys should look at that middle Keltner mark. Even on the 30 minutes, let's see. Because this is kind of a shorter time frame, right? So if we go here where the bull run started, we just have not broken out of the bottom Keltner so far. Whenever we consolidate within the bottom, push out, hold the bottom. This is more bullish because it's holding the middle, but as far as we can see, we've held the bottom. So on your lower time frames, you guys want to see these kind of patterns forming, right? Because if we haven't broken out of the Keltner channel in until what, Monday the 4th, that's a long time, because we're at, today it's the 11th. Like, that's a long time for us not to really break this sort of trend going on. Now looking at the weekly here, like I said, that top of the Keltner channel lining up with 73.8 right here. The middle holds at 66.8, but this is the weekly, so let it develop, and I'm sure this 66.8 will catch up with the 70,000. But again, like this sort of confluence, this is something you need to watch out for. And as you guys can see, look at the Keltner channel pattern that's playing out. We pushed out, right? Broke, held the middle, and then pushed out again. This is, I keep on telling you guys, this is a very common Keltner channel pattern. Even over here, push out, broke into the bottom, pushed out, held the top, and we kept going, right? So that sort of pattern happens when, they want to liquidate a lot of longs, get a lot of people moving bearish, but as long as we stay within this Keltner, it seems like we're good, right? And again, I think a similar idea will happen here. We push up, hold the top like we did here, then we get one run up again, and then we break into it, chop zone a little bit, consolidate, whatnot, and then either we break out or we just start falling. So I'm sure you guys are wondering, what is this pitchfork here? So this pitchfork has been representing our downtrend for the longest time. And as you guys can see, we use this pitchfork both as support and resistance. Support when we broke out, and resistance when we were kind of within this chop zone. So now that we're out, if we really see a pullback happen, a pullback occur, as long as we stay above this kind of pitchfork, even if we wick below, like, I don't know, maybe some crazy black swan news happens, we're here at 70k, we do a quick wick below, and then, but we hold that 70k, well, that's a good indication still, because although we did wick below, we did not fall back into that downtrend. So I would keep this pitchfork on you guys' charts just so you get that kind of full picture. Like, no matter what happens, even if Bitcoin starts dumping like crazy, you kind of have an area where it might bounce, where if it holds, okay, that's a good indication, because this is the downtrend we've been in for the longest time before we made that all-time high. So I'd keep this pitchfork on you guys' charts. Now looking at these EMAs, you guys can see we had, again, we're just holding the 20. This pink one is the 20 EMA. And we've just been holding it, the 9 and the 20. We haven't touched the 100 and the 200. So we want to, again, keep at this trend of just holding the 9 and the 20. If we start falling below the 20, well, look to the 100 and 200 EMAs, wherever they may be, look to them for support. And on the weekly, again, look at the 9 for support. Oh, if it starts pushing below the 9 and the 20, I mean, like the 100 EMA on the weekly, like that's pretty bearish. That's like pretty bearish. That would be a crazy move down, and I just don't think that would happen. And on the 3 hour, again, we're holding this sort of trend here, and it looks like the lowest we've gone since before election was the 200 EMA. So when we see a pullback happen, look to the 3 hours 100 and 200 EMAs, see where they are at, and if we start breaking below here, like the 9 and the 20, expect that pullback to happen around the 100 and the 200 EMAs, right? Like, look for that confluence. Now let's finally look at these Ichimoku clouds. So again, on all time frames, we've kind of just really broken out of it, right? 3 hour, broken out of it. Daily, broken out of it. Weekly, I mean, we're a long way from it. So for the higher time frames, look at this baseline. This seems to be the support so far, and right now it's at 75,000. On the weekly, you guys can see right now it's at 66,000, but that's the weekly. I wouldn't really look at the Ichi Cloud weekly until we get close to it. That's how we know whether we're bullish or bearish. On the 3 hour though, you guys can see we've got, this was November 3rd, November 5th, we pushed out of it, and we've just been using the baseline as support. However, we can see that we've got this thin little area around 70k, and I tell you guys repeatedly, the thinnest part of these Ichi clouds, that's where you're like most likely to notice your points of contention, right? The thinnest part, we just pushed into it. Pushed out of it. And over here, again, the thinnest part, we just pushed through the cloud. Again, over here as well. So let's see where maybe we get that 70k retest over here, and it kind of also aligns with, this is more 72,000, but that's where the bottom of the Ichi is sitting on the 3 hour. So kind of just keep a look out for that, but mainly I would just be using this baseline to tell you whether or not we keep going up or keep going down. Because when trends like these break, well, the market is looking for a correction. If it hasn't done something in over 5-6 days, and all of a sudden it breaks that trend, that's an indication that, okay, market is losing the momentum it once had. The um, fear and greed index, the hype, of the market is changing. The sentiment is changing. Maybe people aren't valuing Bitcoin as much right now, or maybe people are like, okay, we don't know how high this is going to go. Maybe I should just pull some profits just in case. And if enough people think that, that's you see that sentiment change happen when you see these kind of trends break. So imagine we go here, this Ichi line follows, boom, Bitcoin breaks through, and then pumps up a little bit, but fails to push through it again. Well, that's where you know, okay, this isn't good, right? Because we didn't hold the, let me just use a different color. We didn't hold the Ichi baseline here. What does that mean? Well, that means hello Ichimoku cloud, right? So this could be good for opening up your leverage positions or knowing when to exit your spot trades if you're looking to swing trade, which is basically, let's say you bought here, you sell, wait to go back, and you enter with more money. Just a form of trading. I don't know how many of you guys do that, but yeah, that's kind of how you can assess these markets. And these are the trends and the patterns you want to be looking for over the long term, so you know your investments are safe, your positions are good, and you can apply the same thought process to the lower time frames. Now, I don't really use the lower time frames when I'm doing spot trades, but when I am doing futures or leverage trading, I mainly use the 3 minutes and the 30 minutes, because I don't believe in holding a position for like, you know, 2.5 months or something. I'm not going to do that. I just want to, go in, go out. You build your capital like that. Smaller trades, higher volume is honestly, in my opinion, with the volatility in crypto, is just much better. Speaking of futures trading, you guys can use our code to sign up with Bitunix Exchange, a non-KYC exchange that offers leverage up to 125x and 24/7 customer support. You guys can use our referral code LRN Crypto or sign up with the link in our bio and get immediate VIP3 status. That means like even lower trading fees for you guys. And it's already low. Bitunix is already one of the lowest. And you get even lower fees on top of that. And they've got constant programs running right now. They have one running where you guys can win a pair of AirPods Pro with the right trades. As long as you're a good trader, you got that in the bag. So help us. This will support us a lot more than you guys think it will. And it costs you not a penny, not a dime. You don't have to do any deposits. You get that VIP 3 immediately. Anyways, guys, thanks for watching. I know I haven't made a market update in a long time. I've just been working behind the scenes. As you guys can see, we had that affiliation partnership going on with Bitunix. Check that out. We've rebranded and we've opened up our X a little more, and we've recently launched our Instagram. Our Instagram will mainly be a kind of beginner friendly layout, so people who want to get into day trading, they can start there. So check that out, share this, like, subscribe. It helps us a lot more than you guys think. We do this for free. We're not really getting paid to do anything, so the best way you guys can support us for free is just to engage with our content. I hope you guys have a great day and keep your position safe. Bye.